Hello and welcome to CMC Markets Trading Outlook for the week of April the 4th, 2016. My name is Colin Szynski, Chief Market Strategist. Our topic this week is we'll ask the question, have crude oil and Canadian dollar peaked for now? We've had a huge rally in both over the last few weeks, but we are seeing some signs that they're starting to roll over, and this could continue in the coming week. I'm also going to take a look at other action in currency markets, particularly some of the trend shifting we're seeing in US dollar, in euro, in gold, in the pound, and others. We're coming off of what was a really big week for news and big week for Fed speakers, and the big thing that came out of it was twofold. One, that the U.S. economy is doing very well. The Canadian economy seems to be picking up. The European economy seems to be picking up as well. The UK may be struggling a little bit, but and perhaps Japan looks like it's struggling a little bit. But there are also signs later in the week that China may be starting to pick up as well. The current week is pretty light for economic data. Some of the main things coming out this week, we have an interest rate decision in Australia. I'll talk to that a little bit later. We also will have a service PMI reports from around the world, trade balance for U.S. and Canada. There are a couple of developments for Canada later in the week, which could keep the loonie trading actively on Wednesday. We have the IV PMI, the RBC manufacturing PMI bounced up from about 49 up to about 51, so crossing back from that contraction into expansion territory. That was good news. Look for confirmation from the IV number. On Friday, we get Canadian employment as well. We've had some good economic news coming out from Canada lately, improving PMI, good GDP, suggests it should be good for employment, and U.S. employment has also been solid as we go through what's been a pretty good quarter for weather, has helped things in North America. So I want to actually start there with the Canadian markets, and before I move on to some of the other things, we've had a good rally. This is CAD US dollar, had been tracking lower with crude oil, became massively oversold, had a nice rally up. It's been climbing in this rising channel here, kind of bumped up against the top, and each time here we've seen it bump through the top of this channel. It's had a bit of a correction. Looks like we might be getting a bit of that again here. We had a bit of a shooting star up, ran into resistance, short here of 78 cents, is starting to roll back down into this channel. Similarly here we've had overbought RSI, we've had a negative divergence, and that's telling me upward momentum slowing. I suspect though it could go sideways. 75 cents here is the low end of this channel plus round number support. Probably see it move into this kind of 75 to 77, even up to 78 range in the near term. If we take this and look at it the other side at US dollar CAD, here, what we saw here was we had a hammer and what I would call a selling climax or a bear trap, where we broke down to a new low on trend, came raining right back, and we kind of bounced up again. Now we shot up here and we seem to be leveling off though. Kind of this peak here was about dip was below 129.30. This is 130 even, and this is about 131.45, 132. And this first Fibonacci is 133.40. So somewhere in this range, it may start to go sideways in the short term, even though the longer term trends remain favorable. Oil may continue to recover. The U.S. dollar may continue to weaken, which can help the loonie. But in the near term, it does look like it wants to go into kind of a sideways range. And here we had this positive RSI divergence as well, telling us the downward momentum was starting to fade. And so what's some of the things that are holding back CAD now is one of which is probably the most important is crude oil. We're seeing here with crude that we had a nice double bottom and then a big rally up off the bottom, but it's gotten overbought and is starting to roll over a bit. This is kind of maybe a head and shoulders top. We'll see. I'm not totally convinced, but the bigger thing is this: the RSI's crossed back under 50 to signal downward momentum. After a couple of days of caution, it's picked up to the downside again. Here, this level here was 37.13 becoming resistance. This is first support around 35.85. This around 35.35, 35 even, and then down closer to the $34 level. So we could see it slide back into this range here between these two Fibonacci clusters. What's going on with crude oil? Well, it's ongoing uncertainty about what's going to happen with the meeting in Qatar later this month. The latest was, of course, as Saudi Arabia is kind of sticking to their line of that they wouldn't want to cut production unless Iran and other countries get on board. Iran's still saying, well, we want to get production to where we were before sanctions were imposed. So that's where we're finding them a little bit at loggerheads, and how people feel about that on any given day seems to be having the biggest impact on trading in the near term. The other thing we'll keep an eye out for this week, although it probably won't be quite as significant as last week, is what's going on with U.S. dollar and Fed speakers. In the week that's just ended, we saw Fed Chair Yellen come out and basically pull the rug out from under the hawks at the Fed, and basically indicate that the Fed's looking at 2 rate hikes this year. Joining her this in that was some of the dovish members of the Fed, including Evans of the Chicago Fed and Dudley of the New York Fed. They're 2 of the more dovish members, and they're also starting to coalesce around this 2 rate hikes this year. At the same time, they don't want to raise concerns about the U.S. economy, and the U.S. economy itself is running pretty good. We're coming off a day where we've had non-farm payrolls came out 215,000, right down the middle, right in the Goldilocks scenario, not too strong that they have to raise rates sooner, not so weak that people start worrying about a recession, just nice steady economic growth in the States. Purchasing Managers Index for the US and Canada, both of them went from about 49.5 up to about 51.5, 52. So nice economies picking up on both sides of the border in North America. New orders in the ISM report, huge jump up. That's promising for the economy as we move into the second quarter as well. So we've got good support for that, but we still have this feeling, and something that's played out in the early part of this year was that you had the U.S. dollar saying that traders were expecting 4 rate hikes or more this year, priced up near, with the dollar index up near 100, having come up from 80. That's a huge run up that was. But on the other hand, we had the bonds saying that they expect 0 or 1 rate hikes, and we had this huge discrepancy in opinion, and it looks like we're finally starting to see things come back towards the middle, and the way that's doing it is by the U.S. dollar giving way and coming back down. So in the last few weeks, it slipped from 98 under 95. I could see this going back into the 90-92 area over the next few months as the U.S. dollar recalibrates with bonds and with current Fed thinking, as current Fed thinking centers around that possibly 2 rate hikes this year. Most likely 1 in June before the conventions, and then 1 in December after the election. That would seem to be the most likely scenario at this point in time, and the markets seem to be working their way back towards that. The good news about the economy has been helping U.S. stocks, though, with and at the same time, a reasonably dovish Fed and good economic news has been good for stocks. We've seen here, since the Fed ended their tapering program back in late 2014, we had one good rally in the stock market, and then it's kind of been sluggish as people have been trying to figure out now, well, if the Fed's going to tighten, how fast are they going to tighten? What does that really mean? Is the liquidity party totally over, or is this going to be a long, slow fade out? It looks like now we're into the long, slow fade out rather than the aggressive Fed. So, where we've seen some had a downtrend since last summer, the Dow has quietly actually started to break out of that, which is encouraging for U.S. stocks. It's bumping up against it. Touch overbought in the short term, so it may need to work its way sideways, but it does look like it wants to pick up here, perhaps into the 17,900, 18,000 area. Similarly, if we look at the S&P, we're seeing the same sort of thing. These downtrends that have been in place for months, starting to see breakouts to the upside. In terms of U.S. news this week, it's pretty quiet. There are a lot of Fed speakers, though. We have Kashkari of Minneapolis. We have Messer and Kaplan out speaking again. And on Thursday, we get an interesting one. We have Fed Chair Yellen is speaking, and a whole bunch of the old Fed chairs, Bernanke, Greenspan, and Volcker, are also speaking at an event. So that in and of itself might not attract attention to monetary rate speculation, but it could be really interesting for followers of monetary policy to see what the last 4 Fed chairs are thinking about monetary policy and the economy. So we do have a number of speakers from the Fed. So even though there's no news, that could have an influence on trading. We also get minutes from the last ECB meeting where they raised stimulus this week, so we could see some action in the euro. If we look to the euro dollar, its euro is in general is starting to pick up here. We can see it's breaking out here against the US dollar. It's cleared now 113. Up here is around 114.30, and then farther up here is about 115. This big long one here, which I'll actually draw in because I think it's worth taking a look at. Here's 115 right there. So we can see big long-term resistance level 115. It's only peaked above it once, and that was last summer. In the last couple of years, so that's fairly significant. But the euro is doing well against a number of currencies today. If we take a look here at euro pound, is actually breaking out to the upside. Look at this one. A big ascending consolidation triangle, looked like a head and shoulders top that was called off, and now look at this major breakout to the upside. Not only are we clearing the ascending triangle, big breakout on the RSI as well to confirm uptick in momentum. We've cleared 80, and we could see further gains for euro pound, and euro also is picking up against the yen too. So where ECB minutes could be of interest this week. We are seeing signs of here and there of the eurozone economy picking up. So some people are probably thinking that maybe this is starting to work a bit. But generally, we can see also it looks like some base building upturning in the euro yen. I know that the euro broke out against the pound. We're actually seeing a bit of weakness in the pound, and it's a little disappointing to me because it looked like sterling was getting ready to go here a week ago. It's still holding shoulder support of this head and shoulders base here, and it bumped up though against the falling neckline. It wasn't quite ready, so it has dropped back a little bit. But if we look at the RSI, still just bouncing around 50. So this is still a neutral trend that could eventually still resolve itself to the upside. It's hard to say at this point, but this key support here is about 140.50, and this trend line resistance is about 144.35. And certainly, if we see it start clearing 145, that would signal a significant upturn for cable. I also mentioned I would talk to the Aussie dollar before wrapping up because they do have there's a RBA meeting this week, and so what's most important about this is we've seen that as the US dollar has been weakening, of course a number of currencies have been bouncing back. One of them has been the Aussie dollar. It's back above, bounced off 74.75. It's up above 76, trending up towards 77 with this 80 resistance looming up here. As it approaches that, we could see the RBA start to get nervous about the currency levels again. They're much happier with a lower dollar, and if we do see the currency continuing to trend up, it wouldn't surprise me if at this meeting we start seeing them take pot shots at the dollar and try to talk it down again. So keep an eye out this week because that could increase some volatility in the Aussie dollar. So even though there's not a lot of huge headline economic data, there's a lot of news out there. There's a lot of things can happen. There's the one central bank meeting. There's also a central bank meeting in India as well, where they're expected to cut rates. But we've got so news likely from Australia and the Far East. A number of Fed speakers again, plus Fed minutes, plus ECB minutes means that we and of course ongoing speculation on what might happen with oil production in the coming months. So still quite a mix to keep trading active through the week.